Alright, welcome to this explainer. Today we're breaking down a highly requested, super strict, and heavily disciplined roadmap. We're looking at the $100 to $1,000 XAU/USD, or gold to US dollar blueprint. This is a precise 4-week plan designed to literally 10x a small account. No fluff, no guessing, just pure, structured execution.
I mean, let's just be real for a second. How do you actually turn $100 into 1,000 without just straight up gambling it all away on some lucky spike? If you've been in the markets for a while, you already know the absolute heartbreak of blowing small retail accounts, right? It usually happens because of impatience, over-leveraging, or just entering at the exact wrong time. Well, the ultimate antidote to all that chaos is what we call the disciplined sniper methodology.
Okay, let's dive into this. Here's our highly structured roadmap for today. Number 1, the blueprint. 2, trade like a sniper. 3, top-down strategy. 4, ironclad entries. 5, risk and mindset. And finally, number 6, the 4-week path.
Starting right off with part 1, the blueprint, a 4-week plan.
$1,000. That is the overarching goal of this entire explainer. But look, to actually hit that specific number from a tiny $100 start, we absolutely have to anchor ourselves in mathematical reality. You need to strip away all the noise, all the cluttered indicators on your charts, and focus entirely on a single, highly effective playbook. Because consistency and strict rules are what actually get us to this target, not luck.
Which naturally brings us to part 2, trade like a sniper, the power of constraint.
So the crucial point here is exactly that, constraint. Professionals don't go chasing the market. They wait patiently for the market to come to them. For this plan, we are trading only XAU/USD, so just gold. We're focusing exclusively on the London and New York sessions because, let's face it, that's where the real volume and institutional liquidity are hiding. And most importantly, we take only 1 to 2 high-quality setups daily, period. Limiting your focus to just one asset during peak volatility is your absolute best defense against overtrading.
Now that we've got our constraints locked in, let's look at part 3, top-down strategy, from macro to micro.
To really build a solid market bias before you even think about pulling the trigger, you've got to work like you're going from a telescope down to a microscope. Step 1 is checking the 4-hour chart to find our overarching trend direction. Step 2, we drop to the 1-hour chart to map out market structure and find our points of interest. And then finally, step 3, we zoom right into the 15-minute chart to confirm the exact entry. This top-down approach makes sure that your micro entries are perfectly backed by that massive macro trend.
Now, to truly grasp how this strategy works, we need to understand a really vital smart money concept, a liquidity sweep. Essentially, this is a brief break of major highs or lows, and it's specifically designed to trigger retail stop losses before the market actually moves in its intended direction. You see, the market needs liquidity to fuel massive expansions, and it usually gets it by trapping early traders. You absolutely have to wait for this sweep to happen, so you aren't the one providing liquidity to the big players.
Now, what's really interesting is how these specific technical elements stack up to give you an actual edge. We want to see a very specific combination of events. We're looking for those liquidity sweeps to trap retail traders alongside order blocks, which are basically the massive footprints left behind by institutions. Add in a clear break and retest of structure and the alignment of trend lines with Fibonacci retracement levels to catch the perfect pullback. When all of those elements align together in one spot, you've just found yourself a massively high probability zone.
But listen, analyzing the chart perfectly means absolutely nothing without execution. So here is part 4, ironclad entries, where execution matters.
I literally cannot stress this enough. You must wait patiently for all 3 of these events to happen in sequence. First, a sweep of the highs or lows. Second, a break of structure, which proves the momentum is actually shifting. And third, a strong confirmation candle, like a nice big engulfing candle right in your zone. If even one of these steps is missing, you sit on your hands. There are absolutely no exceptions.
Setting those strict rules shifts us right into defense mode for part 5, risk and mindset, capital preservation. Because, listen, capital preservation is the absolute only way you survive this game. Here's the deal. You are risking a maximum of 3 to 5% per trade. If you take 2 losses in a single day, you stop trading immediately. You close the laptop and you walk away. And you absolutely, under no circumstances, revenge trade. Trying to win back a loss immediately is a purely emotional reaction,
and it's practically guaranteed to completely drain that $100 account before the week is even over.
And this brilliantly illustrates exactly why 90% of retail traders fail. It all comes down to mindset. Profitable traders wait patiently. They protect their capital above all else, and they focus strictly on consistency. Unprofitable traders, on the other hand, they overtrade out of boredom, they chase massive green candles out of FOMO, and they let their emotions completely dictate their entries. At the end of the day, your internal discipline dictates which of these two paths you're going to walk.
All right, let's tie all of this strategy and discipline together in our final section, Part 6, the 4-week path, focusing on compound growth. This right here is the mathematical climax of the whole blueprint. We are talking about slow, calculated growth. Week 1, your only goal is simply to grow that $100 to $180. Week 2 takes you from $180 to $320. Week 3, you're compounding that $320 into $550. And finally, Week 4 takes you from $550 to our $1,000 target. This perfectly proves that you do not need a massive home run trade to win here. Consistent, incremental compounding using our strict sniper parameters is literally all that's required to hit a 10x return. Look, if you take only one thing away from this entire explainer, please let it be this. The key is discipline, not gambling. This entire $1,000 plan is completely anchored in the absolute necessity of self-control. You could have the best strategy in the entire world, but is entirely useless if you don't have the discipline to actually execute it properly.
So, I'm going to leave you with a bit of a challenge. Do you actually have the discipline to follow this blueprint? Because honestly, the market doesn't care about your goals, and it certainly doesn't care about your bills. It only rewards those who can conquer their own mindset and execute a plan flawlessly. Take this roadmap, apply it to your own trading journey, and stop being the liquidity for the professionals. Thanks so much for joining me on this explainer, and I'll catch you on the next one.